Are Block shareholders getting jacked just like Twitter shareholders did all of those years? We'll talk about that and more on today's show. What is going on, investors? Hopefully, you guys are doing well out there. Time to talk about Block, otherwise known as Square. Ticker symbol is still SQ. Now, year to date, this stock is down over 45%. Over the last year, down 66%. That's on the heels of announcing Q2 earnings after the bell, sending this stock down another 6.8% in the after hours. We'll talk about the revenue, which came in at $4.41 billion. That was a decline on that revenue side year over year, although it did beat expectations. We'll talk about the expectations for the upcoming quarters and, quite frankly, the next coming year with Block. Then we'll come over here to these financials. We've got to take a look at all the things. I tell you what, there's a lot of things we really like about Block, but then there's always those things that are always present with Jack Dorsey ran companies, which really always leave you in this position. When you fast forward and zoom out on a chart of Square, the vast majority of shareholders that have ever bought this stock are underwater. In fact, if you bought this stock 4 or 5 years ago, you're just up fractionally. And if you're like the millions of people that bought these shares at the highs, you're still considerably underwater. We'll discuss some of the things that need to happen over at Block for this trend to change. Now, let's jump onto those Q2 numbers. Again, revenue coming in at $4.41 billion. That was a decline year over year, but it did beat expectations by 80 million. Now, what is unique about Block's revenue is the fact that they recognize Bitcoin revenue. When you buy Bitcoin on one of Square's products like the Cash App, they recognize that actually as a dollar of revenue. They also recognize it in the form of a cost of revenue as well, and they make a tiny spread between that two numbers. So they make a 1 or 2% spread. So off Bitcoin revenue of $1.78 billion, they had $1.74 billion worth of cost. Now, incredibly good business. You do notice, though, over the last year, as crypto has kind of fallen out of favor and popularity to a certain degree, you went down on the Bitcoin revenue by over $1 billion, from 2.7 down to 1.7. So that is going to negatively impact your earnings. And in fact, year over year, we did see a decline on those earnings, on those revenues. And now what Wall Street, though, is projecting is a reacceleration back into the mid to high teens, and then into the 20, even mid 20% for the foreseeable future over at Block. And so some of that has to do probably with a reacceleration of Bitcoin revenue and interest, but also when you look at the other parts of Block's transaction-based revenue went from 1.2 billion up to 1.4 billion. These are the high margin business. And here's the highest margin business of them all. The subscription and service-based revenue went from 685 up to $1 billion. The reason why that is particularly important is you notice your cost of revenue here. So you had your transaction-based costs. You had that $1.5 billion worth of revenue, about $875 million worth of costs. That's a great business. Subscription and service revenue, you had $1.1 billion worth of revenue, just $213 million worth of costs. That's a fantastic business, and it's one of the fastest growing. In fact, it is the fastest growing over at Block, so you gotta love that. Hardware cost is a lost leader. So off hardware revenues of 48 million, you had $83 million in cost. They basically give this hardware away to generate revenues at a higher margin business. Very common thing. And then finally, we talked about Bitcoin, how it's a very low margin business, but look, it's a business that's spitting off like $40 million a quarter in terms of revenue. Very, very nice business. It also likely is a customer acquisition tool where you can bring somebody in and they buy crypto and then they use your other services. So off of $4.4 billion worth of total revenue in the most recent quarter over at Block, you had about $3 billion worth of cost associated with that revenue. That leaves you with gross profit of $1.47 billion. Last year, you were sitting at 1.1. So nice growth, okay? Really consistent growth on that gross profit side over at Block. Those are things you absolutely love, and that's what these bullish shareholders focused on as this stock rocketed from about $80 all the way up over $280 per share. Now, what I think a lot of bullish shareholders didn't focus enough on are these operating expenses. Product development coming in at $524. That's $200 million more than where you were a year ago. Sales and marketing. We'd expect when our sales go up this much, much, especially in our higher margin business. We've got a lot of sales and marketing expenses. We went from 373 all the way up, nearly $200 million increase to 530. We have G&A costs go from 220 all the way up to 395. That is a dramatic increase there. You have transaction and loan loss exposure over at this company as well. That is ballooned, in fact, tripled from 48 million all the way up to 156 million. You have some Bitcoin impairment losses, those coming in at $36 million. They were slightly lower in a year ago period. Then you have some amortization costs. Those are typically non-cash. We'll look at that in cash flows, coming in at 40. So you bet you your total operating expenses ballooned from $1 billion all the way up to nearly $1.7 billion. So you take your $4.4 billion worth of revenue, minus off $1.47 billion worth of expenses, and another $1.7 billion worth of operating costs, and you get to an operating loss of $213 million. Last year, you were actually positive at 124. For the last 6 months, it paints no better story. In fact, it shows us that we're on kind of a $220 million burn rate on that operating side. We lost $440 million through the first 6 months. Last year, we made $192 million. Now, in terms of the asset side of this company, looking really good. I tell you what, they must have closed on that acquisition deal of Afterpay. You went from $15 billion worth of assets last year up to 28. That includes a massive, we're talking a gigantic increase to this goodwill from 519 to 11.9, roughly $12 billion worth of goodwill. These often get written down, especially when you buy Afterpay like Block did at the height of the market. They vastly overpaid for that asset. My guess, unless things go really well for Block, they're going to have to do asset impairment charge in the future on this one. I don't think that's necessarily priced into the stock, but all things being considered, balance sheet looks pretty good. They have a fair amount of debt sitting at about $4 billion over this company. Now, from a cash flow perspective, it's going to paint a great story because for 6 months, we lost $416 million. Last year, we actually made $242 million. And I'll remind you, this stock over the last year is down over 66%. And the reason why I remind you of that is stock-based compensation last year was $264, and Jack Dorsey and his buddies decided to double it to $532. You gotta be kidding me over at this company. That is just absolutely egregious. You do have a depreciation and amortization charge coming in at $160. So you get your net cash provided by your operating activities. Again, despite doubling stock-based compensation and having nearly a tripling of depreciation, your cash flows went down by over $100 million from 246 down to 114. That, my friends, is a disaster. The rest of the cash flow shows a company actually doing a decent job managing this company from a cash flow perspective, considering they give so much in salary over 6 months, over $500 million worth of the $3.2 billion worth of operating expenses coming from stock-based compensation. And when your stock is down over 60% just over the last year, well, that puts a heavy weight on these shares, and you certainly can see evidence of that. Now, from a technical perspective, this one is performing how you'd expect it to. It's pulled into the more traditional sideways consolidation. PayPal, Alibaba, Datadog, they've all set up in this same formation. They had this massive run, massive stimulus check, PPP loan fueled rally, and that has completely given back, and we're now back into a more normalized zone over at Block, trading currently at $84 in the after hours. I would expect the momentum on this one to continue to go down because, as you can see, in the intermediate term and the longer term, the trend is steeply down. Intermediate term, it's just a less steep version of a downtrend. I would expect this to emerge up here about $90 per share as a high. This one come and retest these lows potentially that we made back here between $60 and $70 per share. If for some reason you do like this stock, considering the valuation is still over $50 billion for a company that bleeds so much from the operating side, considering they compensate their employees heavily with stock-based compensation that constantly keeps a lid on the stock. You can bring up a chart of Twitter, and this is what plagued this company for almost a decade. You see that Twitter went public back here in 2013 for about $41, and over a 8 to 9 year time frame, you're basically dead even on this one. Quite frankly, folks, I don't think that's going to be anything different over at Square. Jack Dorsey and his buddies are going to get incredibly rich and do incredibly well, while the common shareholder will have a lot of excitement because there are a lot of things to like here, but in the end, you're probably not going to make a lot of money. That's why I would trade this stock and be in and out of it and lock in my profits, because that's what the executives are doing with their shares. Hopefully, guys enjoyed today's video. We'll be back again soon with more. Good luck with your investments.